What's happening? What's happening? What's happening, everybody? Hey, this is a special early edition of what is this, Tim? This is an early edition of the price action recap for October 29th, my sweetest birthday, 2022. Yeah. Yeah, man, just doing a special early version of this because I'm not going to be doing a normal 6:30 version because we're going to be hanging out for my sweetie birthday. If this is your first time pulling up for Tim's Tidbit, I want to say welcome. If it's not your first time pulling up, I still want to say welcome and give you a hearty thank you. And thank you for tuning in to Tim's Tidbit. Yes, one again. And don't forget, old Spidey. Y'all see Spidey back there hanging by the window. If you part of the notification game, you pull up, welcome. But I don't expect nobody to be on the live because we normally do this at 6:30. Now I just don't assume that people sitting around with their notifications on waiting on Tim Rogers to get on the internet. But if you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. And I talk about a price action. Why do I talk about the price action? Because I want to help somebody get their aha moment when it comes to trading. I don't want you to spend money on courses. I don't want you to spend money on Discords. I don't want you to spend money on one-on-ones, even if it's with me. Because I want you to take all your money and put it into a brokerage account and soak up as much knowledge as you can, as much game as you can, if you will, from myself and others on Al Gore's internet. And then I want you to go out and apply what you learned and just make money for you. Anyway, with that being said, let's get right into it, man. I just want to share my thoughts on the price action. I didn't want to leave y'all hanging last night. I didn't get a chance to do the price action recap because I was in Atlanta at an event, and then tonight is my sweetie birthday, and I'm not going to be here for the normal time. So I say, you know what? I'm going to do a special live since we're not doing dinner until a little bit later. I'm going to do a special live to go with the price action so I don't leave the gang hanging. Pound it out. There you go. I ain't gonna leave the gang hanging. So let's just get right into it. We're gonna get right into it. We're gonna make it short. We're gonna make it quick. If my mouse ever shows up, there it is. We're gonna get right into it. Looking at Spylean. What did Spylean do today? We came down and we took out yesterday's low. Yesterday's low was here at 395.11, right? And yesterday's high was at 481, right? 395.11 and 481. That was the high and the low for yesterday. Today, we made no attempt to take out buy side liquidity at the 9 o'clock open. I mean, at the 9:30 open, and we just went down and took out sell side. We did pop up first and then go down. Natural bearish movement. You get a pop up and then a move down. Right, that's what the daily candle is saying. We're gonna drop lower when we go to the ES and look at what the tail of the tape really is. I'm moving, adjusting my lines, adjusting the low to today's low. We did not take out sell side liquidity on the weekly level. We came down to an area. We're gonna see what we went down to, and we got a nice reaction off of whatever that was. We got GDP tomorrow, so the market is probably just ranging until the GDP numbers come out. I'll give my thoughts on the GDP numbers in a second after I mark my equilibrium. I'm just marking a new high and low, getting my chart ready for tomorrow. Today's equilibrium for the price action that we did today on the SPY is 395.30. 395.30. Mark that out. And then we're going to jump over to the ES and look at today's price action, give a breakdown of today's price action. Like I say, since we, yes, I'm moving the right one. Okay. Boom. So now that's the daily equilibrium is set. The weekly equilibrium needs not be moved because we have not broken to a new high or a new low yet. We have not broken to a new high or a new low yet. I just noticed that we just came back down and traded through this volume imbalance. We traded both ways on this piece of the volume imbalance, right? We traded both ways on this day right here, which is, the body of that candle. And then we traded both ways on this candle. So I'm gonna go ahead and take that volume imbalance off because in my mind, that's rebalanced now. And the reason why in my mind that's rebalanced because any kind of imbalance, you want to see it trade down through it, right, and back up through it on that same time frame, right? So you want to, I take wicks and bodies. So today we got a wick that went outside it and back into it, and we got a wick that went outside it and back into it, and then over here on the body of the candle, right, you have a wick that went both ways next to the body of the candle. So this wick offered both sides in this area, right, after it was formed. So this body was just like free game. This wick offered both sides in this area of the void, the imbalance, and then this wick, right, that wick, the longer wick, offered both sides of price action inside the imbalance. So in my mind, that's balanced out now. So I'm going to remove it. Get out of there. So that's all I want to do with the SPY. And so with the SPY, I'm looking at this. We came up and we failed to like, this is when we set this on the 23rd and then on the 25th. So that was Wednesday and Friday of last week. We set this high. This week we started out, we did not even try to get up to that area. Let's I'm gonna do this. I'm gonna here's my, how much did I do? Okay, it's not gonna, trying to undo what I did. There it is. I'm like, man, how much did I undo? I'm gonna put this here. Gonna put that there. Just call that bearish gap full. Yeah, call that a bearish gap full on the daily, right? So we got a full gap right there. So yeah, and this candle right there, that's also an order block right there. We got an order block right there on the daily. I'll go ahead and mark that. I wasn't going to mark it, but I'll go ahead and mark it. Then I'll move over to the ES template, bearish order block daily. Okay, so we got a daily order, bearish order block daily. Don't have anything for full gap, so that's good. Okay, so this right from this candle to this candle right here is a huge volume imbalance. But when the when the imbalances be so big like that, sometimes I just won't mark it. I just eyeball it because we got something there that I wanted to mark. We got something there that I wanted to mark, and since that volume imbalance is so big, I'm just not going to mark it. Okay, and that's all I'm gonna mark on this because I just try to mark my SPY with just daily stuff that I'm watching. So that's all I'm gonna mark. The high from today, the low from today, today's equilibrium. The weekly equilibrium hasn't changed. This full gap, that bearish, that's a bearish gap. I don't know why I got a plus right there. That's a bearish gap. Okay. And yeah, that's gonna be it. I'll leave it like that. Okay, that's all I'm gonna mark on now. Now, looking at this right here, I'll talk about that when I get over to the ES. So, looking at the ES again, I started marking this out, and then I was like, you know what? I'm gonna go ahead and do a video so I don't leave the gang out. So I already marked the daily high and the daily low on here. On the ES, we came a little bit closer to the weekly low. We came a little bit closer to the weekly low than we did on the SPY, right? The SPY is close, but not as close. So we came, because the ES trades a little bit more than the SPY do. So we came a little bit closer on the ES than we did with the SPY on the daily low. This is the equilibrium for the day at 39.66.25. We're gonna just say 39.66, close enough for government work. And the close, the New York close of the day was 39.61.25. So that's the New York close of the day. The weekly box is still the same. We have that the volume imbalance is not as big on the ES, but I already marked out the full gap. The full gap on the ES is larger on the 4 hour and below. From 4 hours and below, they all the same size pretty much. So I just marked out the full gap for the 4 hour, even though the daily candle here is way down there. That was just too small of a gap to put for me. Excuse me. And I didn't want to mark out that volume imbalance because I had already marked out the full gap. Okay. This is some buy side liquidity up here. I'm gonna go ahead and delete this line because we're getting farther and farther away from that. And I'm gonna leave it there for now. Let's go down to 60 minutes. We're gonna jump straight to 60 minutes to try to look at what went on today. So we are in a market maker sell model, like I was saying this morning when we first came in. When this was the lowest low, we're still in the market maker sell model. I see that I haven't watched the market all day, so I see that we have pushed down and broke this swing low here and came just a stone's throw away from the weekly low that we have marked out. Came a stone's throw away. We have another breaking market structure to the downside on the hourly at the 12 o'clock candle. I see that we came down into this hourly rejection block over here and pushed back off. Well, Tim, what makes that a rejection block when it's another low right there? I'm glad you asked that question, little Timmy Rogers. What makes that a rejection block in my mind is because this is the high of the dealing range. This is the low of the dealing range. When you're at equilibrium, when you look up to the high, the rejection block, if there is one, will be the last PDA before you get to the high of the range. When you're at the equilibrium and look down below, the rejection block, if one exists, will be the very last PDA array before you get to the low. And this is the low of our dealing range. We have a candle that came down to that point and got a long wick off of it. You got another equal body candle right there with a slight wick right there, right? It's a wick on that. It can be a long wick, short, but the longer the wick, the more of the rejection you see it came that it got the first time. And when we traded down into it, you see that we hit this rejection block, came very close to the low, but we hit this rejection block and got a heavy rejection off of it, right? Heavy, right? Let's drop down low to see which way it went first. Did it go down or up first? We're going to go down to 5 minutes and look. It went down. So we got heavy distribution to the downside starting at 11 o'clock at 10:55. So the consumer confidence number must have been trash. What time was consumer confidence today? Let's check that real quick. Because I know we had consumer confidence today. And we look like we dumped. What did we dump around consumer confidence time? Consumer confidence was at 10. So that's kind of late. 4-week bill. Okay, lower than expected. No, it was like pretty much right in line. It was right in line. So the consensus was 100. It was 100.2. So it was pretty much right in line. And that was an hour after that happened. Because it dumped at 10 o'clock, the numbers came out, okay, here, and then we took off. Didn't take out the buy side, consolidated a hair, then at 11 o'clock, we died. So something happened at 11 o'clock. Was somebody speaking? Was it a Fed member speaking? Was somebody speaking? What happened at 11 o'clock? Okay, today was Tuesday. All right, at 10 a.m., consumer confidence. That's it. That's all that happened today. Let's look at other markets maybe. Apply today at 10. Yeah, consumer confidence daily. Okay, it was a Fed member speak. That's at 10 o'clock. Nothing happened at 11 as far as I can see. I don't know. Regular price action, I guess. So regular price action, we died off at 11 o'clock. And then we came all the way down and made the low at 11:25. So we just died off, hit the rejection block, and we took off, right? So you see on the 5-minute candles, we died off, had a breaking market structure to the downside, right? Hit the rejection block, and then we took back off to the top side, had a breaking market structure to the upside, came down, ran sell side liquidity there. Looked like it may have been a OTE entry. Let's check that. I ain't talked about OTE in forever. Look like that might have been an OTE entry. Yep, looking like OTE. That looked like it's around about 70%. Look like it might be around 70%. Let's see. 62. What's going on? Hit apply. Right there. Look at that. It was almost 70%. That I still kind of calibrated. So we got a nice OTE entry. We ain't talked about OTE in a minute. Right, we came down. We're in extreme discount market. The market traded back up, had a break in market structure to the upside. Went up past this fair value gap on the 5-minute level, came right back to the break in market structure right there. Came almost wick for wick, a little bit above. So he came right back to the break in market structure, came back down for the OTE entry, popped back up to almost filled in his fair value gap. Right, came to the top of this bullish order block on the opposite side of the model, because we got like the little small model with the sell-off, but it's an order block on the opposite side. So when you come back to that bullish order block on the opposite side, a lot of times that's a selling opportunity. That's playing out on this lower time frame. The lower time frames don't hold a lot of weight, but that's a bullish order block on the opposite side of this model, but it still worked where you come back to it and it was a selling point. Boom. Right, you came up, hit that bullish order block that was on the opposite side of the sell model, and it sold off. It worked out just like it typically does with the order blocks on the buy model and sell model. So we hit that bullish order block there on the opposite side, hit this bearish fair value gap here, didn't quite fill it in, but then we sold off quickly, came right back down to this bullish order block, this 5-minute bullish order block right there. But let's go back up to the 15-minute and look at the price action. So on the 15-minute, as you see, we came back up to a fair value gap also, right? Didn't quite fill it in. We didn't quite fill it in. You got a really big bearish order block here, right? Really big bearish order block right here. So we came up and sold down, right? So you got the bearish order block. You got the fair value gap, all this on the 15-minute, and we came back to equilibrium on the day. So all of that lined up just perfectly. And on the lower time frame, you saw that we had the bullish order block on the opposite side, the equilibrium, the fair value gap, the bearish order block on the 15-minute, the equilibrium, the fair value gap, all of those, confluences, and then boom, the market took back off, came back down. You got this bullish order block here. It's a lower order block that we traded to on the 5-minute, right down there somewhere that we had already pointed out. And then we took back off, right? And then we also got a breaker right here. We got a breaker right there, came back down just past that breaker. So it ain't really respect that 15-minute breaker. It was more so going down to these order blocks, because that is a breaker, because this low right here broke this high. Then we traded back through it. So it disrespected that breaker altogether. It didn't even respect it. It just took back off and kept going up. Right. When we traded back down through it like that, we just took off and just blast through that. Didn't have no kind of respect for it. So it was like, get out of here, you little fake breaker. Then it traded back down to that same area again and bounced off of that area. But it was more so about these order blocks down here than this breaker acting as support to the other side. And after that, we just kind of came back up close to equilibrium, didn't quite make it there, and we just stopped and started to consolidate. It's a lot of wicks on the top. We got a whole lot of wicks on the top. Right there, we showing this potential rejection block right here at equilibrium, right? Because this on 15-minute charts, because we came up and took out this buy side liquidity right there, got up to equilibrium, wick down, got an equal body candle after taking out the buy side right here, right? Wick down. And if you look at, this dealing range, from here to there, the New York dealing range. If you look at the New York dealing range, this is the lowest low. This is the highest high of that dealing range, right? So looking at the dealing range of the New York, you know what I'm saying? Well, this would actually be the lowest low, right? But on this price leg right here, and if you go here, this portion of the price leg, that right there will make that a potential what's the name? So you come down here, this is this price leg coming down, then you start going up, pull back, go up, pull back, go up, pull back, go up. So that's a little piece of the price. This is the overall price leg right here. From this low, this the highest high from there for this entire price leg. But we had several pullbacks on this climb up. So that little piece, this little piece, and this little piece. So looking at the highest high and the lowest low of this little piece right here, right? That right there is a potential rejection block because we came down, we hit an order block here, never got down and broke that low, pushed back up, and we've stopped so far, and we haven't come back up to this high. Coming back up to this high puts us at equilibrium on the day, so we can very well hit that rejection block and push off lower, right? Can we blow through it? Yes, we can, because if the algo swap back to a higher piece of the puzzle, it can blow straight through that, out of there. That can just be buy side liquidity that is looking to take in the higher scheme of things. Now, turning our attention to tomorrow, when GDP come out tomorrow, right? Looking at tomorrow, looking at how we traded today, right? We're here with the market maker sell model that we're in. We have not taken sell side liquidity on the week, right? We have not taken buy side liquidity on the weekly range that we're looking at, right? So we haven't taken out the buy side liquidity. We haven't taken out the sell side liquidity, right? The market is in a sell model. So it's continuing to come down, right? So let's say the numbers come out and it's something that the algos like. The algos want to be bullish off of the information, right? If the algos are bullish off the information, I would expect it to come down and run sell side liquidity, right? Run sell side liquidity, maybe hit this hourly order block here, right? Or hit this daily breaker here, right? Hit this daily breaker here, or hit this hourly order block here, taking out this sell side liquidity, taking out this sell side liquidity, and then starting to proceed back up. If the market wants to be bullish off of the GDP number, if it likes the GDP numbers, I would expect it to come down, run sell side, at least run sell side down to this order block right over here, right? Let's mark out the order block in case somebody can't see it. How long I've been on here? 23 minutes. Good time, Tim. Oh, what's happening, man? I see like 20 people in here. I'm gonna shout y'all out in a minute when I get finished. I appreciate y'all for pulling up. Notification gang. All right, notification gang. Since y'all so nice and pulling up, if I can figure out a nice question to ask, why did I pick that? If I could figure out a nice trivia question to ask, I have a sweat. I get somebody a sweatshirt. I got to see if I can think up something nice. Since y'all so nice to pull up and come hang out with me with the notifications on. And this is a 60-minute order block. Okay, so all right, if the algos like the news and they want to be bullish, right? If the algos like the news and want to be bullish, I would expect the algos to whip down, take out the sell side liquidity for the weekly range up under this consolidation, and get down to at least this order block, or take out the sell side liquidity here and hit this this daily breaker, right? Will it get as far as equilibrium on the overall price? I don't know, but I would expect it to at least run out this sell side liquidity and then hit this order block, maybe even tap that breaker. Let's look at where the 3 indices are. So this right here is the low of the 17th. Okay, this is the low of the 17th. This right here is the low of the 21st. And this right here is the low of the 22nd. Okay, so the 22nd, 21st, and 17th. All right, so looking over here, let's change these to, I'll leave it on hourly candles. So the 22nd is the ES. We've already gone below the low on the 22nd. So the 21st, we haven't tapped the low on the 21st. That's this low right here. And then the 17th, that's this low over here. So, all right, so on the ES, the 17th to there. So the 17th, we're below the low on the 17th on the NQ. The NQ has already taken out this low. The Dow, oh, that's the 17th way over there. The Dow is nowhere near it. Okay, so we got some divergence. The Dow is showing the most strength. We know the Dow has been strong for the last few weeks, or at least the last week or two. The NQ is showing relative weakness. It has already taken out that low, right? If the NQ is the leading indicator, the Dow has a long way to come down. The ES just has a short way to come down. If the Dow is being the strength indicator, then the NQ has already run lows and is ready to take off, right? The NQ has run sell side and it's ready to go. If the Dow is the strength indicator, right? The ES is a stone's throw away from this sell side. That's the sell side. I like to see it pop down, take out this sell side, and at least get to this order block before going back up. And this is the other sell side I was talking about below this low to get to this daily breaker, right? So tomorrow we'll tell the tale with the news. The news will tell you which way the market wants to go. I'm currently not in any positions. I closed out my puts yesterday. The puts that I bought on Friday, I closed them out yesterday, my 400 puts, because the puts was putting. The puts was putting. You hear me? So I closed them out yesterday. I'm not in any positions. That's one of my rules. Don't be in no position before GDP. I'm not in any positions. I'm waiting on the news, right? So if the market doesn't like what the GDP says, if the algos don't like it, looking at where we are now, we've had a breaking market structure to the downside here on the 12 o'clock candle, and we traded back up to this order block and wicked off of it, and then start to push back up like we coming to revisit this. We're trying to get back up to equilibrium on the day. If the algos don't like what it says and it wants to sell off, I would expect it to take off and take out this buy side liquidity, right? Maybe hit this order block and get to equilibrium of the weekly, right? And then drop it like it's hot. If the algos want, that's what I would expect to see price action do. So come up, take out this buy side at 39.91 ish, right? Get back to the weekly equilibrium at 39.96 ish, hit this daily order block, and then maybe sell off, or it maybe get up to the equilibrium of the premium, right? Get here right around this little rejection block area, because that's at the top of this, you know what I'm saying, this range right here, because this was the top of the box. We moved the bottom of the box. It was from here to here. That was the top of our range on the daily. We made a new low, so we moved the bottom, and I left that line. That was the other line. I was like, I'm going to delete it, and I like, no, I'm gonna leave it there, right? So that was the top of the box previously, but I put this right here because that's today's high, and I like to track the daily highs, but I would expect it to come out, take out this high, get back to equilibrium, maybe even hit that order block and sell down. If it pushed through that order block, right, depending on where price is when the news come out, if it pushed through that order block, then I would look for it to take out this high, hit this full gap, and then drop it like it's hot. So bearish scenario 1, take out these highs, hit this order block, drop it. Bearish scenario 2, take out these highs, take out, depending on where, like if we sell up all night, get some bad news, and then it take off, you know what I'm saying, hit that and then come back down. But I'm thinking the algos may like it, so we might get a, you know what I'm saying, take out sell side and then start going up. Or the market can just take off on us. It can be super bullish where we take off, take out buy side, then retrace back and just keep going up. Or it can be super bearish where we take off sell side and just keep going down. It just depends on how the market want to do it. Because like I say, we're in a sell model, and all we need to do to complete this sell model right here is tap this sell side liquidity. But last week we came up to the hourly rejection block, and came all the way down to an hourly rejection block on the sell side, and now we're retracing back up off of it. So we're just trapped in this range right now. Look for what GDP gonna say. That's all I got. I yield my time. I just want to share that because I ain't gonna say left everybody hanging. We didn't get a chance to look at the price action last night. Want to go in and give my thoughts on the price action today. A lot of people say, you know what I'm saying, me breaking down the price action help them to see it better. Me breaking down my thoughts on it help them to confirm some stuff they were thinking, help them to open their eyes to stuff. So just wanted to share that. Before I get out here, let me see who pulled up. Regina, thank you for pulling up. Sanjay, thank you for pulling up. Yeah, checked in early. I appreciate that. Hit the like button. What's up, Stacks? What's up, Michelle Tucker? Yeah, it started without you. It was just something special. It was something special. I ain't wanna miss 2 days in a row. I ain't wanna, you know what I'm saying, leave y'all hanging 2 days in a row. What's up, Seawalk? What's up, 100? What's up, Playboy Trey? Let's tell them little boys I said salute with both hands. Yeah, man. That's all I got. I appreciate y'all, man. We're gonna get ready to go hang out and celebrate with my wife in just a little bit. But like I said, I just wanted to, you know, give y'all the price action recap since we missed it last night. Again, thank you to everybody that was in Atlanta last night. I ain't expect nobody to be there. I ain't even know nobody from the gang was gonna be there. I ain't even know people from the gang lived in Atlanta. And then some people, they said some people was driving from a long ways. What's up, Pamela? I appreciate that, Trey. Happy birthday to my sweetie. Trey said happy birthday. Appreciate you, Pamela. Hey, we will have fun. She been having fun all day, been smiling like a teenager. Hey, I see y'all in the morning at, oh, wait a minute. Yeah. I see y'all in the morning for the overnight price. Action. Till then, man, y'all enjoy your families. Be safe. Don't put off tomorrow what you can say today. Let the people know that you know. Let the people you love know that you love them today. Say it and show it. Till tomorrow, man. I see y'all. About to get out of here. Gone.